Hello, classmates. My name is Michael Monhan, and today I want to talk to you a little bit about the economic and financial analysis I did on the country of Thailand. So let's get right into it. So, what what is Thailand all about? It's a densely populated country in Southeast Asia. It's bordered by Myanmar, Laos, and Cambodia. It's considered newly industrialized economy. It has what's called a constitutional monarchy, which means the head of state is different than the head of government, which I'll touch on in the next slide. And the central bank is the Bank of Thailand. So Thailand is an incredibly charged political state. U.S. politics has nothing on Thai politics. So again, it's a constitutional monarchy, so that means the head of state, which is the king, is separate from the head of government, who's a prime minister, and that prime minister is elected by a 500-member House of Representatives, which holds elections every 5 years. Unfortunately, the country has been in near constant political turmoil since 2006. Although it's outside the analysis period, since 2006, Thailand has gone through four new constitutions in 2006, 7, 14, and 17, two military coups in 2007 and 2014, a military junta from 2014 to 2019, and an invalidated election in 2014. To say that this country has been through a lot politically over the last 14 years would be the understatement of the century. And although things have gotten better in the last 2 years with the end of an oppressive junta, there's still an immense amount of political tension and pressure, as shown with the 2020 Thai protests, which were mostly called off with COVID-19. So now we're going to turn to the central bank. So the central bank is the Bank of Thailand. The currency is the Thai baht, and our position for the head of the central bank is Jerome Powell, the chairman of the board of the Fed. And their equivalent position is the governor of the Bank of Thailand, and that's currently occupied by Sethaput Suthawaranarthaput. So let's take a look at some economics, specifically GDP up first. Again, you could see, and this is seasonally adjusted in US dollars, uh, that there's been a significant uptrend. And again, remember, we're looking at an Asian country, so COVID really started Q4 2019 into Q2 2020 when it mostly ended over there. And you can see, unfortunately, we don't have data for Q2 or Q3 through the official Bank of Thailand website, but you can clearly see an uptrend that was ended by COVID. So again, positive GDP growth, a great outlook for any economy. Next, we go into the balance of payments. This chart is oriented the wrong way. So 2015, the oldest data is on the right, and it reads to the left. That has the newest data. But again, you could clearly see a trend of going towards a positive balance of payments, which is good for the country receiving those payments. So again, you have more money coming in than coming out. Next, let's look at inflation. So this is the CPI price seasonally adjusted. So you could see over the last roughly 5 years, there's been not a whole lot of inflation, almost bordering on deflation territory. Over the whole period, it's only gone up 1.16% as a whole, not per period, as a whole. This is bordering on deflation territory, which could spell absolute disaster for even the most established economies. Next, we have the yield curve, and this is another good sign for the Thai economy. There's very little sign, except in the 2 to 3 year range, of an inverted yield curve that shows very little market inefficiency. And an inverted yield curve, which Thailand does not have, could be a potential sign of a upcoming recession. So again, good thing to not have that. So what's their stock index is the SET index, or the SET index. And this is where it kind of falls apart for Thailand. Great economic data, but the returns just aren't there in the stock market. Over the analysis period in 4 3/4 a year, the index as a whole has lost 16%. So it roughs out to 1.17, or sorry, 1.7% annually, and then a log return of negative 3.2% over again yearly. And it's kind of been up and down, which could be shown through the standard deviation, very high standard deviation of 19%. But the returns just aren't there in the market. The FX is a separate story, being one of the better performing currencies on this chart on the right, on the top. You could see how even against an incredibly strong US dollar, it has maintained its level, only being down about 1.3% annually. And what the log return allows us to do is project out the price, the exchange next year. So on August 31st, 2021, we would expect the baht to USD conversion to be about 30.58 baht to $1. So let's look at some risks. So again, we mentioned the political risks, the juntas, the coups, the four constitutions. I feel like, although we talked about it a lot, it's so underserved in the amount of risk that provides. We're kind of isolated from that in the United States, true political risk. Because no matter what somebody says on Twitter or what someone goes and runs to the press about, in the end, there's always been peaceful transfer of power and no real true political risk for the last roughly 225 years, something we've been incredibly fortunate to have. So I don't think people in the United States can accurately assess without true analysis the level of risk that comes along with having an unstable government. So next, let's look at foreign currency risk. Again, we just mentioned there's not a whole lot. It's maintained its value even against a strengthening dollar. And the stock market risk really comes from the political risk. What if the protesters bar the door to the exchange and or start breaking down the infrastructure that makes up the exchange? That could be a real problem. Interest rate. The Bank of Thailand conducts business very, very similarly to the United States Federal Reserve. And I think that's one of the least amount of risks here is the interest rate risk. They have a target interest rate. It's made through a board of economic advisors, highly similar to the Fed. And then lastly, liquidity. Due to a large international presence, as well as an established economy, there really is no liquidity risk in any publicly traded security there, especially due to the fact that large international presence. So lastly, should you invest? If you were my client, would I tell you to invest? I would say no. Mostly, there's two main reasons that weigh on my decision. The political risk and the lackluster market returns. As I mentioned earlier, the political risk that comes with investing in Thailand is immense, and for me, just too much to overcome. This problem is accentuated with the heightened risk by below average market returns over the analysis period. The extra risk you take on not only is not rewarded with extra returns, but greeted by losses. And that would be the main reason I would tell you to not invest in the great country of Thailand, despite all the positive economic data. I'd like to thank you very much for your time today, and I hope you have a great day.